and welcome to this week. And what a week it has been. So it's great to be back. I know we missed last week, and thanks to a little tumble down the good old stairs, I seem to be very clumsy on stairs. It's a thing. Um, not the this one. I basically just misjudged a step and went for a little bit of a tumble. Probably the best ever. It was in Alabama, and I'll tell you the story here as people are piling in. So I was visiting somebody in Alabama, and they had a set of wooden stairs going down into the basement. I love wool socks. I was wearing wool socks. Well, wool socks and polished wood pretty much don't mix very well. So I stepped on that top step and I went down tumbling like crazy. Now, because this was Alabama, I think the people who owned the house were scared to death that I was getting ready to sue them. Because I get up though, I was just laughing at the bottom because they were like, why are you laughing? I'm like, I'm fine. I'm fine. I'm just laughing at the fact that you polished a set of stairs going down into the basement to basically create the situation that I ran into. So that was a little bit funny. Anyway, so tonight, well, this afternoon, I keep always wanting to call it tonight, but it's not. So this afternoon, I've got some news. It has been a light news week. So definitely, this is a great time to bring the questions. If you got questions, or if you got tangents, or you want to hear stories about stuff, that would be cool. We will do that as well. So we've got Jill in the house. Hello, Jill, and we have the friggin' Oracle, who is Bama in the Slamma. Okay, awesome. I think I just learned some slang, which is fantastic. Um, well, we'll start this off by talking about the moon, of all places. It's interesting because it seems like investors are always wanting to go to the moon, or at least their investments go to the moon. And right now, NASA has been trying to go to the moon. Not successful, though. They've had two attempts. Both attempts, they've had a situation where they had some liquid hydrogen leaking. So they've had to basically cancel the two attempts. So they're now going to reschedule for a third attempt. And that third attempt is not going to be for a few weeks because they want to make sure this time that it is fixed, because obviously they weren't able to fix it the first attempt, between the first attempt and the second attempt. And I think right now, considering how many billions of dollars NASA has put into this project, um, they need it to work. They need to get a win on this. So they don't want to, I don't think they want to throw it up again and have it to absolutely fail once again and sort of have people lose a little bit of confidence. And according to the friggin' Oracle, for Canadians, it is illegal to commit a crime on the moon. I don't know if that's true or not, but let's go with it. Sure. And talk about a step ahead. Yeah, they're looking to do that. Now, what exactly, for those of you who are not familiar, what exactly is going on with this whole Artemis 1? What are they trying to do? For one, the rocket is the most powerful that they've ever used. So they're looking at basically, and they've actually re-requested some of the two side rockets from the shuttle, so they're repurposing that for this as well as the main booster rocket. But what their goal is to get it up there, and it's a 39-day mission, and have it do a very sort of deep orbit. Actually, this thing will go further away from the planet than any of our rocket ships have, which is fantastic. There's no people going up this time. It is mannequins. So they've got mannequins going up to sort of simulate people. They want to just make sure everything is safe and that it works before they send real people. Now, they are hoping to send real people back to the moon by 2025. And it's going to be interesting. They did say they want to hit the diversity bells with that one. So get the first woman on the moon, the first person of, of color on the moon as well. So that's going to be cool. I mean, I'd love to see a whole bunch of different people on the moon. But here's that thing. Some people are like, why the moon? We've already been there, done that. Well, unless you're a conspiracy theory, then you probably don't think we've ever been to the moon and it was just all done on a Hollywood stage. But we have been to the moon. If you actually, if you have a telescope, you can actually zoom in and shine a laser and have it bounce off of this thing that we had put up on the moon, basically a reflecting surface. So we can prove that we've been to the moon. Just there's many ways. So, but anyway, the whole object of the moon is that the moon's basically gonna be a great place to create sort of a stepping point towards Mars, because we can store stuff up on the moon and then we can get it off the moon pretty easy because the gravity of the moon is about 1/6 of the gravity of Earth. So it takes a lot less power to move stuff off of the moon. So think of it as almost a gas station on the on the highway to Mars. So that's kind of what's going on with the moon. Now the friggin' Oracle, he's really up. Yep, Google it. All right. So that's about the breaking the law on the moon. They want the cheese. There's no cheese on the moon yet. If we took cheese with us, then yeah, sure, there would be cheese on the moon. The moon will become the new daycare for our rug rat, I'm going to assume. There we go. That's it. You know, your kids are misbehaving. Do you want a timeout on the moon? We can send you there. We've got the technology. So that would be kind of funny. But that's what's been going on with the moon. So, like I said, it's a light news week. So I've pulled a bunch of different stuff. Um, from the moon, let's go to Starbucks. So most of you probably know this week Starbucks dropped their pumpkin spice latte. They do this every year. It's almost a tradition. Now, I have a feeling that there's two different types of people in the world. There's the people who love the pumpkin spice latte and people who hate the pumpkin spice latte. There's enough people that love it that the input of sales when they drop this usually bumps their price up a little bit on that day. So that's kind of cool that that's happening. Now, in Starbucks, though, there are some issues. Their revenue is down. They are starting to recover, but the problem here is, um, if you've ever been to a Starbucks, there's so many different drink variations, and a lot of these drinks can take up to almost 5 minutes to make. So, a new CEO of Starbucks has come in, and they're looking at ways they can try to streamline Starbucks. So maybe you're going to see less items on the menu because they're also dealing with the whole worker shortage thing. And we're going to get to that a little bit later, too. So that's kind of an interesting thing. And now the freaking Oracle's talking about the sun. The sun will burn out in about 5 billion years. Well, here's the interesting thing. What will happen to the sun in 5 billion years is once it's run out of most of its fuel, it's going to basically start expanding. It will become what's called a red giant. Now, the sun will expand out to about the Earth orbit. So, Mercury's gone, Venus is gone. Now, you would think that Earth would be gone, but maybe not. And here's why. As these other planets are destroyed, we've got change in the whole gravity dynamics within the solar system. So the Earth's orbit will actually be it'll move. Our Earth will move a little bit further out, so we won't actually be engulfed. Of course, anything that is alive during that time will absolutely be dead. No doubt about it. We'll be like a molten slag of rock circling this giant red giant. But once we've gone through that part, it doesn't explode. What will happen is it will then collapse, and it'll become a white dwarf. So it'll be a small, compact star. Now, white dwarfs are still producing energy, not as much. And eventually, over time, they become something called black dwarfs. But to become a black dwarf, it takes more time than we currently have in the universe. So we don't have any black dwarfs yet. It's all theoretical, but it's kind of that whole end of the universe where everything goes dark and it's kind of a sad place. But anyway, there we go. The freaking Oracle sent me on a tangent. Woohoo! Now back to Starbucks, right? So with the Starbucks restructure, they're looking at ways that they can try to streamline the service, make it faster. For one, they want to be able to, do more with the employees that they do have, so that if they're less tied up, they can make more product. And at the same time, they also are looking at the frustrations of customers. If you ever go to Starbucks and people have all kinds of complicated coffee orders in front of you, you are not going to get there quickly. Of course, and I have to say this as a financial minimalist, if you just stay home and make a coffee at home, it will cost you a lot less. It'll take a lot less time, and you've got extra money left for investing. So just to throw that out there for you. And now the freaking Oracle says fast like Tim Hortons pizza pilot project. Yeah. Well, McDonald's tried to do pizza at one point in time, but it didn't stick. I remember the McDonald's pizza. It actually wasn't that bad. Like, on the pizza, they actually took the M from McDonald's and they twisted 2 M's to make it sort of look like 2 P's. But, you know, they weren't bad, and they were cheap. So I do like cheap, but oh well, sometimes things just don't last. Now, since we're talking about food, one interesting thing about food is there's a giant drought right now going on in California. Now, that's a little bit on the serious side, but because of that drought, there's a couple of big food companies, Driscoll's and Nature Ripe. They want to start growing blackberries, raspberries, and strawberries in Canada. In particular, they're looking to go at Ontario and Quebec. And before, in the past, that hadn't really been feasible for a couple of reasons, because Canadian summers didn't used to be as long as they are now. So our summers have gotten longer, our growing seasons have gotten longer thanks to climate change. And they also have new strains or varieties of well, these different berries that are more hardy. They can grow, they can grow in shorter summer seasons if necessary. So that's kind of an interesting thing. We may actually have a lot more blackberries, raspberries, and strawberries in Canada. And there is a huge demand for them. I know looking for frozen raspberries this year has been absolutely mind-boggling, because they're just not there. So that's kind of interesting. And if we start growing them, maybe they can sort of, we can also start looking at exporting some of these things too. Here's an interesting thing. Let me ask you guys right now in the chat, what do you think Canada's #1 fruit export is? What do you think our #1 fruit export is? So just something, let's just see if we can get a couple of answers here. Throw that in the chat for me quickly, and I would like to see what you guys think it might be. And McDonald's got rid of pizza, took too long. Yeah, it did take a little bit longer than what they're normally used to. So that may have definitely been part of the issue. It's illegal to gather rainwater in Florida? Huh. That's a really strange law, because you can gain any of you who've ever been to Florida in the summer, a lot of these little torrential thunderstorms, like, you'd almost get like a little tiny thunderstorm almost most afternoons. It would come in, it would drop an insane amount of water. So I mean, you could gather a lot, but apparently you'll go to jail for it, according to the freaking Oracle. All right, so somebody wants to take a guess about Canada's fruit export. Oh, here we go. I believe somebody Googled it, but I could be wrong. But the friggin' Oracle is absolutely correct. So blueberries are Canada's #1 fruit export. And when I say #1, basically, if you can look at all of our fruit exports, blueberries make up 61%. So that's a good amount of blueberries for sure. Oh dear. Now let's go from blueberries to grapes. Now, Ontario, as you know, Ontario is a big grape. We grow a lot of grapes in Ontario, but the problem is the weather has not been on our side with with the DeRoche and a lot of the storms that we've had this year. So normally we're looking to produce about 82,000 tons of grapes each year. This year, we're actually going to only be able to produce about 42,000 tons. So we're going to have a lot less grapes. So where's that going to impact us? Well, if you're a person who likes like ice wine, for example, you're probably going to be paying a little more for it this year. So this is all, and this is, like I said, this is all weather related. Sometimes the weather comes in and it giveth or it taketh away. And I saw Jill made that guess there about tomatoes. Tomatoes is actually a fruit. Most people do not know that tomatoes is a fruit, but tomatoes is a fruit. It's not a vegetable. The reason why is because of where the seeds are. That determines the difference between a vegetable and a fruit. But a tomato does qualify as a fruit. And the friggin' Oracle says, I came up with that due to all the blueberry farms in this area. Yeah, absolutely. As a kid, my family, we used to go blueberry picking all the time in Nova Scotia because there's tons of blueberries. It's like you could just go in the woods and fill up a cup and then just sit down and have a cup of blueberries. It was like free blueberries as far as the eye could see. So yeah, and you could also go, of course, you could go to blueberry farms if you wanted to, and there was a lot more to pick at the blueberry farms, which was fantastic, except for that one time I went to a blueberry farm and I sat in an ant nest. That wasn't fantastic. That was horrific. I'm still mentally scarred from that, I believe. So, but speaking of the weather and food, if we jump over to the prairies in our wheat crop this year, we are on par to have our third best wheat crop ever, and since they've been keeping records. So what we're looking at is we're basically looking at a wheat yield increased by about 55% above average, and that is fantastic considering the fact that there's a massive wheat shortage in the world. So we're talking about a lot of extra wheat this year, and that's just going to be absolutely cool. All right, now let me catch up here with you guys. Friggin' Oracle saying, "Oh boy, Raisin Bran is going through the roof." Yeah, I used to love Raisin Bran as a kid. That was one of my favorites. Isn't blueberries a great antioxidant? Yeah, absolutely. Of all the berries, according to the health gurus, blueberries are pretty much the most healthy. They have the most antioxidants. Basically, what an antioxidant is a chemical within the blueberry that goes into your bloodstream and it removes something called free radicals. And free radicals, they're these chemicals left over from different reactions that happen in your body they're very active and they can damage DNA. And then when the DNA repairs itself, it could repair itself into a cancer. All right, and Trevor says Newfoundland has the best blueberries. Absolutely, I think the entire East Coast, from Nova Scotia right up to Newfoundland, have fantastic blueberries. I have not, and this I feel bad about this, Trevor. I have not been to Newfoundland. That's the only province in the country I have yet to go to. And that's actually funny because my brother lives in St. John's, so I have no excuse to not visit Newfoundland. So it's on my short list of places I would like to go and see for sure. Next year, we will see the effects of the fertilizer and nitrogen issues. Yeah, absolutely. Like a lot of the stuff that's happening now, we're going to see issues popping up over the next, I would say, if you look at the entire big picture, we're going to see stuff that 10 years from now, there's still going to be stuff happening that is a result of everything going on right now. So it's pretty much, the way it is. The saltwater air. Yeah, absolutely. I think saltwater is definitely good. So I would imagine just from that argument, I would expect if you go down into the States, I imagine that the blueberries would also be good in Maine. New Brunswick, they might be good as well. And I don't know so much about PEI. PEI doesn't seem to have a lot of blueberry type areas. They've got so much agriculture with potatoes but I'm sure there's some blueberries on PEI. So anybody here from PEI, if you are, let me know. How are the blueberries there? I know every time I've been to PEI, I've been thinking about things other than blueberries, but they could be there. That's kind of cool. All right. So that was blueberries. of all the things, and wheat. Now, the Canadian gross domestic product, that did come out this week, so there was a tiny bit of news. Basically, well, no surprises. It rose by 3.3% in Q2. So that is awesome. Other than the fact that everybody thought, most economists believed it was going to rise by about 4%. So there is signs, at least some initial signs, of a little bit of a slowdown. So that could be part of the road to recession, but we have to sort of wait and see what happens. I think this is one of these things where in such there's so many variables flying around that nothing is really behaving the way it should. And that in many ways, that's kind of cool because it makes it so that you just don't know what's going to happen. And sometimes you get to watch things and analyze them after the fact. And that's kind of a pretty cool thing. And I see there Trevor is talking about golf courses on PEI. I imagine that there is some golf courses on PEI. That would be kind of cool. PEI is a fun place. If you've never been there, you should head there. It's a really good summertime place. Golf courses are a dying thing. Not to people who play golf, they're not. But yeah, I think golf courses, we're sort of in this situation where I think it's kind of the whole economy thing. So things like golf, people are, if it's like, do I, pay the extra interest on all these credit cards thanks to the rate hikes, or do I go play golf? Some people are making the right decision on that. So I think that's part of the reason for that. Now, so that was the Canadian GDP. Talk a tiny bit about oil. When do we don't talk a little bit about oil? So this week, Russia, who's been playing with Europe over that whole Nord Stream 1, recently they had reduced about 20% of its output, but now they have said, they've said nope, and they've turned it off. So Nord Stream 1 is now officially off. Now, normally that one line provides 35% of the total imports of Russian oil to Europe. So that's kind of interesting. So we got a little bit less happening here when it comes to oil for Europe, and that's not good with summer ending and moving towards winter. Now the G7, they have been talking as well about capping the price of Russian oil, and they have now officially agreed to do it. It's beginning on December 5th. So the way it's going to work is they will come up, and they don't know what the price is. It's still to be determined. So the way they're going to do it is they will set the price, and then to prevent people from countries from sort of circumventing it and just doing it anyway, what they're doing is they're working with the big insurance people who insure oil tankers, and these guys will not provide any insurance if you paid above the cap. So let's say, for example, the cap was $100 a barrel. If you went in and bought it at $110 a barrel, you get no insurance, and that's a big thing. So these tankers are not going to be carrying oil without insurance, because that would be just really, really dumb. So yeah, that's kind of where we're at with that. So it'll be interesting to see how that works out. Now, a different type of oil. The friggin' Oracle has got himself some olive oil. Just say it. The oil isn't Virginia anymore. Oh, I think you're talking about, I know what you mean. You're just trying to make me crack up on stream. Okay, good luck. I challenge you, friggin' Oracle. Make me laugh. Make me laugh. We will see if it happens. So that's your goal for the rest of the stream. If you make me laugh, you win. If you don't make me laugh, then I win. So let's see how that works out. Let's talk a tiny bit about housing prices. I got a little bit on housing prices. So TD Bank has released a report, and they basically said that they're looking at housing prices to drop by about 25% from their highs. And we're talking about by about, early to mid 2013, according to TD Bank. So that's what they're seeing for the housing price drops. Now, keep in mind, uh, interest rates are going to keep going up. Now, because we still got some positive GDP and a lot of the data on jobs looks pretty good, we're probably, when the Bank of Canada meets in September, we're probably looking at another 75-point hike. They won't do another one full basis point, and I'll tell you why. Or sorry, 100 basis points. They won't do a full 1%. And I think it's because where we did slow down a little bit on the GDP, if we had come in above 4%, I would imagine they probably would have came out with 100 basis points. So let's you know, let's just prepare ourselves for a little bit more higher interest because it is coming both here and of course towards the end of September the Fed meets in the US and they're going to be hiking rates as well and they're going to be aggressive. We all know that when Jay Powell had his little thing there down at Jackson, it was it was a very good indication that they're staying the course and they're very, very determined to get that interest rate back down. Not the interest rate, sorry, the inflation rate back down. So that's kind of cool. Now, the friggin' Oracle is mentioning that Nate mentioned last night in my stream that mortgage rates are 5.5% now. Yikes. Yeah, it's getting up there. Hopefully you guys got yourself a you didn't get yourself a variable mortgage because you're probably really, really feeling the burn right now, which is kind of funny because in the past, before the whole pandemic, usually over time, variable mortgage opposed to a fixed mortgage tended to provide a better rate, average rate across that time period. But for right now, because of the pandemic and the fact that rates got dropped so low, it would have been silly to not grab a fixed or as long of a fixed rate as you could grab. And exactly. So the freaking Oracle has a 2.61% rate for the next 4 years. That's fantastic. Because the beautiful thing is, once they've got that interest rate, once they've got the interest rates, not the interest rates, once they got the inflation rate down where they want it, they're more than likely going to push it further than they want, and they're gonna have to eventually reverse some of these rates. So they'll have to start lowering rates. So hopefully in 4 years, when the friggin' Oracle has to, renew his next mortgage, it's gonna be a situation where the rates are back down again, which would be fantastic. Obviously, now if the rates are still really high when the friggin' Oracle's mortgage comes up, then it's a situation where you might want to say, okay, well maybe it's time to switch to a variable, but right now, no, not yet. Definitely not yet. So that's a little bit about housing. Now, I did mention as well, jobs are looking good. The US actually had a jobs report come out, and they did fantastic. They had 315,000 new jobs created in August. And now here's the thing, they still have, and this boggles my mind, they still have 11.2 million job openings in the US. Basically, there's 2 job openings for every unemployed person. Now, that's one of those things that they want to get down. Now, most businesses in the US, well, when I say most, it's more or less 50%. So let's just say half of the business in the US have said that they do intend over the next year to probably look at laying off people. So that might change some of these numbers pretty big time, which would be great. So, and the freaking Oracle's also trying to pay extra over these 4 years. That's pretty cool. Yeah, especially right now. I mean, where you're getting, and the freaking Oracle right now, because of the, whether it be the worker shortages or what, he's getting an insane amount of overtime. So that is a good way to use that extra money to, take care of a few things. And, ooh, smash the like button. Yeah, let's do that. And the other thing, too, any of you here who have not yet subscribed, smash that button. I'd rather the sub button than the like button, as I'm on my journey to 1,000, and we're slowly creeping our way up there. I think we're at 929 or something like that, but we'll get there pretty quickly. Yeah, so that's fantastic. Okay. So we were just talking a tiny bit about jobs. So yeah, I'm running out of information already, but I still got more to talk about. China. We'll talk a tiny bit about China. There's a few things going on with China. One is in Chengdu is going into lockdown. So they've had a COVID outbreak in the city of Chengdu. And when they go into lockdown at this point, you're looking at 4 days bare minimum that everything is shut down, because then they have to go in and do all the COVID testing and get everything under control. Um, Now, this actually could impact a few big companies. One of them is Apple, because that's where the factories are that make their iPads. So Chengdu could have an impact on Apple's bottom line. Also, a few of the major car manufacturers do a lot of manufacturing in Chengdu. So, for example, Volkswagen and Toyota. So there is some stuff going on with China. Now, another big thing with China is the US, because where the US is looking to try to bring chip manufacturing back to the US, they have now started banning chip manufacturers in the US to exporting chips to China. So that's all going to be very, very interesting and awesome, Dave. So it'll be interesting to see how that goes. But don't smash too hard, as you will break your phone screen. If you're watching on a phone, it's curious to know. Like I look at my stats and I see that actually surprisingly TVs are doing really well, much more than I thought. But I think more than 50% of you guys watch this on a mobile. Um, Now here's a funny thing. I almost never watch YouTube on a mobile. I usually watch on my desktop. And it's not that well. I used to when I used to have to go out and go to work and ride the bus all the time. I used to watch YouTube on the bus just to sort of pass the time. But yeah. Oh, there was one story I did want to tell you guys about Starbucks. So I am a financial minimalist, but I do love to have that. I do love the latte. So I went out to get one the other day with Jill, and we were using the outdoor patio, and a friggin' hornet landed in my latte, and not just landed. The fluid sort of somehow sucked the hornet into my drink. So I put the cover back on and it went in the garbage. I'm not going to drink something with a hornet in it, even if it drowned and can't sting me. I'm still not going to drink it, no matter how good it tastes. But yeah, that was one thing I was just like, I forgot to mention that when we were talking about Starbucks. Um, okay. I want to talk about uranium. So, with uranium, we're looking. We're on.
Sorry, I'm still not sure about that.
No, I'm not talking to you, watch.
Okay.
My watch sometimes has this she just likes to answer questions, or sometimes she just inserts herself into the conversation. So it's just kind of funny. But okay, back to uranium. So right now we're in a situation where the demand for uranium is actually rising. And the reason for this is the energy crisis. A lot of countries are starting to reverse their stances on nuclear power. So Japan has now said, "Yeah, let's build more nuclear power plants." So with the increase in nuclear power plants, we're looking at an increased demand on uranium. Canada has a lot of uranium, so this is really good. Now, one company in Canada, Cameco, I think their ticker is CCO, if I remember correctly. Um, they produce uranium, and they've actually said that right now the demand for uranium is already bigger than the amount they can produce. So there could be some really big investment opportunities in uranium. So for you guys who are, maybe thinking, "Oh, maybe I want to watch uranium." I would do it. I'd throw it on a watch list at the very least, because I have a feeling there's going to be some money to make there. Now, most of these stocks are not going to be your dividend stocks. These are going to be your growth stocks. But if uranium explodes and you've got some stock sitting in, let's say, your RRSP, that's a good way to really expand what you've got in there. And then, that's kind of cool. And now the friggin' article is just talking about uranium. So he's saying that, yeah, it's clean. Just the disposal is the issue. And here's that thing about the disposal. It's actually not as bad as the media likes to make it sound. If you drop the stuff in a deep enough hole, it's not really an issue. And nuclear waste. And when we talk about nuclear waste, usually it's just expired control rods. They're just radioactive. You got to store them. And eventually we're going to be able to, like right now, what the stuff we're looking at is called fission. And once we get into fusion and we're able to do that, we're going to be in a situation where we'll be able to create insane amounts of energy with no waste. Sort of like the Doc Ock in Spider-Man, the power of the sun in the palm of my hands. That's what fusion technology will do for us once we get there. So that'll be cool. But we have tech created every day, so this issue will be resolved. Yeah, absolutely. The technology that we're creating is just mind-blowing. And most of us, like in the general public, we're usually the last people to find out about the new technology. So, and usually a lot of times the things that we see today as brand new, high tech, top of the line awesomeness, these are things that have been invented like 10 years ago. Or even in some cases, like let's say if we go to the US military, their stealth bombers, they had them for they easily had them for about 40 years before we found out about them. And we only found out about them when the Gulf War happened, because they were going to use them in the Gulf War. So, and and I find this interesting is if you look at, I guess we should call them UAPs now, but if you look at UAP reports, from like, let's say the 80s, for example, well, what did they used to, there used to be a lot of, black triangles and, oh yeah, it was like a triangle. It was just like a one single wing. And when you look at the stealth bomber, they look pretty much like a lot of the UAP reports from like the 70s and 80s. So, I'm thinking, I know that the government sort of has said, well, no, they're not ours. But I think a lot of these UAP things that they're talking about and that NASA is now going to be looking at, I think a lot of them are just our own black technology, stuff that we won't find out about for probably another 40 years. When basically they have no choice but to use these technologies. So that's kind of cool. Yes, Brian, we did start without you. I tried to wait, but the clock said start the stream now. So I jumped in. An Area 51 watcher seen them, so they had to let the cat out of the bag. Oh, well, there we go. Canoe EIT. Oh, Anthony. Yeah, I love my canoe. That is the one stock I am over diversified on. Like I think I was sitting at about 17.7% the other day, but now they had a couple of good days. So now I'm up to about 18 point something percent. So that is a number that of course changes with how much I have. I do need to have a little bit lower, but I'm not going to sell any of them. I do love canoe. So it would be a situation where I'll just let my other stocks build up around canoe. But canoe is fun. Like, I just got this in the mail the other day. See, it's my, ooh, can you guys see this? My 2022 interim report. So I'm going to read that probably this week. So that's one of the things. A lot of the stocks that you guys are investing in, a lot of them will provide you with a lot of stuff as a shareholder. So for, interim reports, annual reports, I get them. It's an incredible, great amount of information. Like a canoe video that I did earlier in the year. Actually, it's one of the ones. It's a canoe video that exploded me from, I was like, I was sitting at around 400 subs and I did this one canoe video. And quite literally in less than a week, I was, I was pushing towards 700 from that one video. And I used their report for a lot of that video because I was able to I was pulling the data out. Now you can also find a lot of this stuff online. So if you go to, for example, since we're just talking about canoe, if you go to Canoe's website, they will put their reports on there. Sometimes they'll put some information, like the last video I did on Canoe. I was able to pull some information from their CEO when they was talking about how they're positioned to be in, prepared for a possible recession. So it gives you a lot of data. And hello, Joe. All right. Now, this guy has a wonderful channel, by the way. Just pull him up here. So Joe Misek, investment advisor. So any of you guys who like, any of you guys who are here and like my content, I think you will like Joe's content. He makes some really good, high quality productions. He's not as frequent video wise as I am, but the stuff he does drop is fantastic. And he just dropped a video on the new TFSA for home buyers, for new home buyers. So if that's something you're thinking about or you want some more information on it, I don't have a video on that yet. Not to say I won't in the future, but Joe has a fantastic one he dropped 2 days ago. So guys, do me a favor, go over there, check out his video, drop him a like, and if you like his content, and I think you will, you know what else you should do while you're over there. So that's my good buddy Joe. I love Joe. He has great content. All right, Nancy said, this is why I love dividend investing. When bear markets hit, I'm not worried about the stock price. As long as the dividend doesn't cut off, I can sleep easier. Yeah, absolutely. Now I'll give you guys a warning about high dividends. A lot of high dividends are very unsustainable. So you got to really pay attention. I'm not saying that every high dividend stock is a danger zone, but a lot of them are. A lot of times you'll see situations where a company is just running. If you look at their dividend payout ratio, if that's really high, like if that starts getting up to 99 or 100, or if it goes above 100, usually it's not sustainable. So you want to be paying attention to your high dividend stocks and be prepared. If you're getting a bad feeling about a stock, there's nothing wrong with being prepared to rebalance into something a little bit safer. Now, a lot of times when people first get into investing, they will look at those dividends and they will look at those numbers. And I've seen people who are so tickled pink because they found a dividend that pays 11%, and they are, oh, awesome, Brian. I see that. They find that dividend that pays 11% and they're thinking, oh my God, this is fantastic. I'm getting 11% every month. When if they had invested in a growth stock, especially in good times, or one of the more recession-proof ones, I'll use CNR as an example. Like CNR doesn't have a great dividend, but you're making up more than that 11% person. And the end of the day, the person who has the 11%, they have 11%. The person who maybe had CNR, they'll have like, I think it's just shy of 2% on the dividend, but then they might have an additional 20% just from the growth of CNR. So in the end, it should always really come down to, to your total return, not so much on your growth return or not so much on your dividend return, but add those together and look at it from that perspective. However, now with that being said, when you're an older investor and you're starting to look at retirement, a lot of times at that point, growth is not even important anymore. And plus, you don't have time to recover if the market goes bad. So then at that point, you're probably looking at, for sure, trying to pump up that passive income, because what that's going to do is, as you start looking at your old age security and you start looking at your Canada pension plan, well, passive income, dividends from your investments are a fantastic way to be beefing up how much you're making every month. And if you've got it all sitting, let's say you've got your TFSA all maxed out and you're making a nice chunk of passive income from that TFSA, well, here's the beautiful thing. That is not being counted as income. Even though you may be making, let's say you're making $900 a month just from that passive income because you've been a good investor through your working years. Well, if you're making $900 a month in passive income, that 900 is not being used to calculate your old age security. So you're going to get more money than if you had 900 that was just coming in through, maybe a part-time job or something like that. So that's why passive income, when you get in towards the retirement, starts to make a lot more sense, because they really, really give you that opportunity just to make your life a lot more easy. Now, keep in mind too, with your RRSP, it'll, once you hit a certain age, it'll turn into something called a RIF, which is basically, it forces you to use a little bit of it each year. But here's the beautiful thing: even though it's making you use a percentage of your RRSP every year, it's still growing, and the stuff that's left in there is still growing. So that can still last you a long time. And depending on, well, your family history, your health, that's always a good thing, because you want to make sure that you make it all stretch out as long as possible. But anyway, that was a little bit of a tangent on Anthony's question there, but that's kind of cool. And, and I do love all my canoe folk. You guys are just absolutely awesome. Why did the banana go out with the prune? Oh, it couldn't find a date. Wow. Keep trying, Ken. Keep trying. Oh, I see the dividend ratio over 100. Yeah. Now with Canoe, they are designed. They try to keep their payout pretty darn high. And I'll definitely I'll touch. I should touch on a video. I should do a video on payout ratios and sort of explain all of that. It's just one of these things that whenever I do an explainer type video, they don't do so well. It's like, you guys are like, give me a list, and I'm like, but wouldn't you like to understand about CPI or something like that? But that's why I've got that format. Now that I do 3 videos a week, I have, like, Monday, I got your list videos for those of you who love the lists. Then on Thursday is my deep dive video, so I can just go nice and deep into a company. And then Saturday.
I found this on the web.
Hi, thank you. I'm taking my watch off because she just keeps on interjecting into this conversation. Then Saturday is, I call it the This Week Presents. So usually I'll look at something in the news, and like last week, it's really interesting. Last week I did the one on hydrogen. It did okay, but then all of a sudden now I'm getting a lot of views on the hydrogen. So people are really looking at that. So that's kind of fun. And all right, now let's pull. How do monkeys stay safe when they walk down the stairs? They hold on to the banister. Nice try, Ken. Holy banana bread, dude. You're trying. All right. And Jay says, I add 2 ETF every month. So, okay. Does that mean you add an EIT and an ETF? Or, well, I mean, EIT, if you think about EIT, it is an income trust. So it's almost like an ETF, because they do invest in a lot of companies, both in Canada and the US. So you could technically call it an ETF, but it is a trust, and it works slightly different than an ETF. But for all intents and purposes, it is very close, very helpful. Well, thank you, Anthony. I try to do my best. And for those of you who are new here, I take requests. I always do, because, this is I look at this as being a community, and me is just being that person who stands up and does all the talking for everybody. So that's how I kind of look at that. So definitely, and if you put a request in here in a chat, I may not see it, or I may forget it if I don't write it down. I usually say the best way is either in a comment on one of my videos, or if you go over to my Facebook group, Mountain Finance over on Facebook, throw it in there, throw questions in there. Like, you guys don't use the Facebook group as much as I'd love you to. Every so often someone will throw a question in, and I do my best to answer every single thing. Jordan, yeah, sometimes the notifications just don't work. But the beautiful thing is, watch the last bit, and if you want to see the beginning, you can. It'll be live on the site, so you can check it. Well, not live, but the replay will be on the site, so you can check it all out. And hello, Okay, Dave D. I got behind on a credit card several years ago, paid everything off, and was just pre-approved for a line of credit. Feels good to be back to normal. Well, congratulations on that, Dave. So many people get themselves, because debt can be one of those things that it feels like quicksand because it can surround you. And a lot of times people don't know how to start. It becomes very overwhelming. Now I know Dave Ramsey down in the States, he has his little snowball method of paying off debts. Now in his version, the way he does it is he likes to pay off the smallest debts first because that will give you a psychological boost. So if you have one debt that's like $500, you pay it off, it feels great, it's gone, it's out of your life. That's fantastic. I like that, but my brain is very mathematically focused. So the way I do it is if I've got a pile of debts, I pay off whichever one has the highest interest rate first, because then overall I'm going to, and keep in mind, if I was working on a bunch of debts, I would also spreadsheet them to death because I do love spreadsheets. So my boost of motivation would be watching the math show me that I'm paying less interest every month. um, but what I normally will tell people is that I know people sometimes don't have that mathematical keenness that I have. So I will usually say, look, do a combination. You know what? If you're just starting at the moment, maybe you're already gun ho, you don't need that little boost yet. Start working on that one with the highest interest rate. And then if you start to feel like you need that boost, then swap over and just do the one that has the lowest value, get it off your plate, and then go back to the highest interest rate and sort of use it that way. And I find that by doing it that way, for a lot of people, it gives them that boost when they need it. And sometimes you may just need the boost once. And once you've gotten one of those little ones gone, you're like, all right, I'm in it this time. I'm in it to win it. So, that's kind of the cool thing. 4 p.m. every Sunday. No excuses, Jordan, except for last week when I fell downstairs. So, oh dear, that's funny. Um, Save overall. Yeah. So it's just one of those things. All right. So we got about 8 minutes left. So throw your questions up if you got any. Um, I had one last little story just about Labor Day. Uh, Here's a question I have about Labor Day. You're not supposed to wear white after Labor Day, and I don't know the answer. One of you guys might. When are you allowed to wear white again? Just out of curiosity, I think that's like an etiquette thing. But when are you allowed to wear white again? So, anyway, if somebody knows that, throw it up before the end of the stream. That would be awesome. Um, but a lot of businesses who are wanting their people to come back into the office, they've actually put Labor Day as their, as that day. So starting tomorrow, well, not tomorrow because it's being a holiday, but the day after tomorrow, a lot of these companies are saying you have to come back into the office. Some of the banks, for example, are saying the same thing. But I think a few of them are like, we want you in because, especially with the bigger people, because, you will inspire the people who work for you. So a lot of them are going into sort of a partial, like you have to put in X number of days every week or something like that. So it's going to be really, really interesting when we see how it all works out. But that's kind of that whole argument. And there's a lot of pushback, obviously. People are like, I'm happy working at home. I don't miss a commute. And that is cool. I mean, I know this myself. I mean, I leave the house when I have to, whether it be social or going out to get groceries or something like that. So I'm kind of glad that I work out of my studio because that just that makes my life so much easier. I remember, oh gosh, there's been jobs where I've had where I used to spend 2 hours every day, 1 hour each direction on the bus. And that's a lot of time that you could utilize for something else. So it just, it's one of those things. 4 p.m. What is the thing you call time? Well, it is a yeah, it's a thing. It's a thing, Jordan. I know you're smart enough to understand time. Oh, I missed it from Dave D. I picked a credit card through my bank that only has a 13% interest rate. Yikes. See, 13% still sounds pretty high, but here's the ideal way to handle a credit card is get one that has no annual fees. And if you can pay it off every month and get a reward, some kind of, whether it be cash back or something, that's fantastic. But yeah, sometimes though, sometimes you have no choice. Sometimes you do have to rack up some credit, and the lower the rate you can get, the better. 13% for a credit card is actually not bad at all, considering a lot. I've seen credit cards where your rate is up around 20%, so or even higher. So that's not bad, Dave. And you've got your line of credit, so now you have that opportunity to start building up your credit. Here's a one key advice: if your card, let's say your card has a limit of, let's say $500. I'm just using that for easy. Well, let's just say $1,000 because that makes the math easier. Try to not put more than 300 on it, because there's this big thing called utilization. And utilization means that if you use all of your card, it actually will make your credit score go down, because it makes it look like you absolutely need it and you're always, on the verge of falling behind. But when you maintain a high utilization, so you keep most of your card empty, it improves your credit score. So one of those things is sometimes you might be sitting there and the bank may say, hey, we want to raise your limit. Let them say, yes, please. Don't use that extra space. Just let that space work in your favor, building up your utilization score and improving your credit. Then when you start to look at things like mortgages, a lot of mortgage companies, they will look at your credit. And a lot of times you can get a better rate if you have really good credit. So when you have kind of borderline credit, they'll give you a mortgage, but at a much higher interest rate. So that is an important thing to keep in mind if you ever want to be a homeowner. And let's see here. I also found out about the average annual compound return when looking at the dividend yield too. Yeah, absolutely. And that's kind of one of those things too, is you got to look in. Now, keep in mind too, when you talk about a dividend. So let's say with Canoe, for example, when you're getting that 10%, if you're reinvesting that, when you're getting that 10 cents every month on the on each share, if you're reinvesting it, then that 10 cents is then going to be getting more money. So when you do start to compound, and that's the power of compound investing. So it is insanely awesome. And it can build up. And I really should do a video, because then we can play with some math. So let me keep that in the back of my head there. I think it's because you should be married, as in wearing white before you're in labor. Okay. Nice try. Nice try. A monthly dividend payer tech stop name LifeWorks. Okay, interesting. I have heard of LifeWorks, so I owe 8,500. I owe 1,000. It's 8,500. I owe 1,000. Okay. Yeah, so you're not bad. That's not too bad. So basically about 30%. So you want to kind of look at it that way. You're 1,000 on that. I'm not going to do the math in my head, but that's probably, I don't know, probably close to 15, 16% maybe. So that's not too bad. All right. So this is what I got coming up this week. I am cutting the show pretty close to the 1 hour, because I do have a commitment I have to go to, a social commitment after the show. So coming up tomorrow, I had a request to do an aristocrat video. So not only tomorrow, but tomorrow and next Monday will both be aristocrat videos. The one tomorrow is simply high dividend aristocrat stocks. So we got 7 of them, and there's a bonus if you watch to the end. So you can check that out tomorrow. And then another request on Thursday. Somebody asked me to do a deep dive on Alimente Couche-Tard. I'm probably pronouncing them wrong. I have to make sure I learn the pronunciation before I make that video. They will be up on Thursday, and then we'll be back with I don't know what yet on Saturday, because I try to wait to see what happens in the week, and because I try to find a connection if I can. And then we'll be back here, of course, as well next Sunday. So that will be awesome. So I just want to thank you guys all for being here, because it's Labor Day weekend. So I was actually not expecting a lot of people because of the holidays, but I hope that I hope this weekend has treated you well. If it's hot and sunny where you are, maybe it's a fine day for a barbecue. All right, guys. Thank you once again for being here. We'll see you next week. And of course, as always, just keep being awesome because I love this community. You guys just rock my world. All right. We'll take care, everybody.